Hello guys, today we are talking about how to make your first $10,000 from trading. Now practically we live in one of the most favorable times for you to achieve this if you have the right skill, of course. And to get it straight, you won't achieve your first $10,000 by chance, by luck, or through gambling. Now in this video I've broken down 3 practical things that will assist you get to your first 10k. And the first one is having the right system. Now anytime we talk of a trading system, you could think of it as a strategy, as a model, or an approach that you use in the market which gives you an edge. Now based on your preference, your personality, and your trading knowledge, you could choose to trade, let's say, price action, support, resistance like I do, or maybe you're an SMC trader. Regardless of this, you need to choose one model, perfect, and stick to it. I'd also recommend you to settle on not more than 3 pairs. Anything 2 to 3 pairs is very nice for a start. And now since we want a working model, we must have proof that this system works and there's profitability, which brings the part of backtesting. So you need to do a lot of data collection on the pairs you've chosen, or you can backtest a number of pairs and then you narrow down to the most profitable, just 2 or 3. And when backtesting, there are 2 things you're looking for. The first one is the entry criteria. What are those things and steps you must see before you can validate a setup is of high probability? And the second thing you're looking for is the poor trading conditions, which you need to avoid being in the market. Now this is where many traders miss. Typically you find that trader has a very nice entry criteria. They know exactly what they need to see to take a setup, and that's fine. But most traders don't know when to stay out. So when you're backtesting, you also need to understand the poor conditions that affect your setups negatively, which will tell you when to stay out of the market. Entry criteria will assist you to make money. But the second part, which is the conditions you're avoiding to trade, will assist you to keep the profits. Lacking the second part is why you see many traders, they are profitable for 2 or 3 weeks, then the last week of the month, the 4th week, they end up blowing all their profit within one trade, 1 or 2 days. Usually it's because you don't know when to stay out. I've given you a couple of examples using my system. I don't trade whenever we have high impact news, because this is something I've already determined that even if I make a lot of profit and then I try to execute during such conditions, there's a lot of proof that I always end up giving back the profits to the market. Depending on the system you are trading, you need to find out what are those conditions for you. You might find for your system, maybe it works well during New York session, it doesn't work well during a certain session. So when you find a trade outside the window that is profitable based on your data, you know I shouldn't be taking such types of trades. So having these 2 things will allow you to create a very effective edge, and this is how you focus on quality setups over quantity. Now as you're backtesting your system, try to refine it as much as possible. Make sure you're going for the most optimal conditions. And here's an example. You might be using a risk to reward of a 1:3, but maybe if you do proper refining, you might notice your system can work optimally with a 1:4 or a 1:4.5. So you want to adjust it to the best level possible so that you are taking full advantage of your setups. Now also when backtesting, I want you to be very practical. You see, the reason why some traders backtest and they don't see the results reflecting in the market is because they start failing in the backtest with unrealistic trades and setups. When you're backtesting, I always recommend using a replay so that you don't see what the market will do next. When you use a replay, it puts you in a position to execute as if you were there real time without knowing the next market move. How traders fail in backtesting is they start to take and record unrealistic trades which real time in the market they know they would not have taken them. But because you've already seen the market bought or sold, you start to tell yourself, I know I would have taken this setup. So in your backtesting, be as practical as possible. If the criteria is not met, don't take that trade. Otherwise you end up having inaccurate data which shows you are extremely profitable, but it's because when you are backtesting, you are taking trades that are not even in line with your system. Then in the real market conditions, you can't do the same thing. Or it could be a setup that happens, let's say at 1, 2, 3 a.m. Now depending with your strategy, if you know you're not able to wake up consistently at 1, 2, 3 a.m., you can't record those setups in your backtest. It doesn't make sense for you to be recording that your strategy has 80% win rate or something, and out of the trades you've recorded, a good number were coming at times that you can't practically execute. So real time in the markets, when these setups show up, you're not able to execute because maybe they happened when you were asleep. So these are some of the things that I've done to make my system as effective as possible. That's why you might have heard I told you I always execute setups from 6 a.m. my time, because it's very practical that on a daily basis by 6 a.m. I'll be on my charts. So in backtesting, this is something that I factored in. And this way there is high accuracy between the backtest data versus the performance that I replicate in the market. Because the same things I backtested is the same things I'm trading consistently. One thing you might have noticed is I often repeat the idea of data collection because I know that's the answer to most of the problems you have. Most of the questions you are asking about where should I take my trade, what level is good for entry, what stop loss should I use, the questions you are asking are in the market, but you need to collect the data, go back in time, and put in the work. You can't be lazy and expect to hit your first $10,000 through gambling or through luck. You must collect the data. It's a very uncomfortable process. It takes a lot of time. It's very mental, but that's the whole idea as to why we have very few profitable traders, because the average person doesn't want to put in that level of effort. When building your model, simplicity is key. Let it be as simple as possible. When backtesting a pair, if one pair can make you an average of 3R, 4R, which can equate to about 3-4% with a 1% risk, then that pair is good enough. All you need to do is get a second pair, so that if each pair makes you 3 or 4R, with 2 pairs you can make an average of about 6 to 8% in a month. So don't complicate your backtesting process expecting one pair to be making for you 10-15% on a monthly basis. That's how you find yourself looking for a holy grail that doesn't exist. Once you have all these things in place, there are 2 things that will happen. Number 1, your confidence level will be boosted. That means when you go to the market to take setups, you will have very less doubts because you have more than enough proof that your model is profitable. So your work only remains to execute. The last thing you want is to go to the market with a system that you doubt. And that's why we have a lot of free trading strategies, even on YouTube. But ask yourself why you still have many traders struggling. Because the person who's showing you the strategy, maybe they did the backtesting, so they have confidence to execute. But you who's trying to learn from someone's model without collecting data, you might not have the same level of confidence in terms of execution as them. And what happens is you start to make a lot of errors when implementing their model, and you become a losing trader even though the system might be working. So confidence is very important. And the second thing that you'll get as a result of this confidence, of course, is that your psychology will be boosted. So in my opinion, 80% of psychological problems come from a result of lack of system, lack of data, lack of confidence. If you have a proven model, if you have enough data to back what you are doing, and your approach is tested, there's a very low chance that you will be struggling with emotions in the market because you are relying on what the data is telling you, not what your thoughts and your feelings are telling you. Before we continue, let me introduce you to Prop Farm Match. This is the place where you find data across different farms. Before you buy that Prop Farm challenge, you want to be aware of the trading conditions in terms of the spread, slippage. You want to be aware of the trading rules. This is where Prop Farm Match comes in. They offer detailed information across different farms. You can compare to see the prices, the types of challenges, whether it's a 1 or 2 step. You can check reviews from verified traders who have done payouts. If you're looking for a farm with discounts, you will find them listed with the best offers. And most importantly, you can customize your trading challenge until you find the company that suits you. For example, maybe you want a 1-step challenge, a company that allows crypto trading, allows news trading, weekend holding. You can customize all these things on their website and you find a list of the best farms. Be sure to visit Prop Farm Match. The links will be in the video description. Otherwise, let's get back into the video. Now that we have a proven model that we are confident in, the next thing we need to focus on is capital. Currently, prop firms have made capital access very easy through the leverage that they provide. Now, when you talk of capital, we have to be realistic. If you have, let's say, a 5K account, which is a $5,000, for you to make $10,000, you need to do 200% return. Now, what is the practicality of you doing 200% return? Very low, and it might take you forever, right? And again, since you're not trying to gamble and flip the account, you want something that is sustainable. On the other hand, let's say you have a $100,000 account. $10,000 on a 100K is only 10%. With a profitable strategy, you can achieve 10% within even 2 to 3 months. So you see, it can take you 2 to 3 months to achieve your first $10,000 if you have a 100K account. But if you're someone who's never made such returns from the market, I'm assuming you're still growing slowly. That being said, I'll break this into 2 parts. The part where you start small, then the second part where you go big. The part where you start small is you'll focus on the small prop farm challenges first. And by small prop farm challenge, this could be either a 5K or a 10K depending on what you are comfortable with. There are 2 reasons why I recommend you starting with a small account if you've never had those big returns from the market yet, and you're still in the journey of building that capital. And the first reason is purely psychological. If you've never traded these small accounts and you start with a big account, there's a high chance you'll make a lot of errors because you might be overly excited or you might be too scared when you see the big numbers, the big losses, the big profits that you've not seen before. So you'd rather start with a 5 or a 10k account for you to start to synchronize your psychology with the markets and the figures slowly by slowly. The second reason why I recommend you to start small is you need to understand that we can't assume you're going to pass your first challenge or you're going to pass every challenge you will take. That being said, you might want to start with an account that even if you lose, you're still able to afford buying another prop firm challenge without digging too deep in your pockets or it affecting you financially in a bad way, or even finding yourself in a position where you can't buy another account because you spent all your money. Now think of this, when I started prop firms myself, in my first year I didn't pass a single challenge. So I'm not trying to be pessimistic, but I'm just telling you to be practical. There is a chance you might make an error. There is a chance you might find the market conditions are not good. And these are things that are unavoidable and can happen. So to factor these in, you want to take a challenge that if anything goes wrong, you can afford to buy it over and over, and the cost is not that expensive. Now if I failed 3 5k accounts before I passed the first one, there are a couple of things you will have learned in the 3 accounts you failed. So by the time you're taking the 4th one for you to pass, you'll find that you are very good in terms of managing your prop firm account. However, the 3 accounts maybe each cost you $40. So the cost of the mistakes was worth $120. Assume you took a 100k account which cost $500 and you end up failing 3. The cost of those mistakes is about $1,500, which is way expensive as compared to $120. And the funny thing is, you might find that you've now spent all your money and you don't even have enough to buy another prop firm challenge. So this is where I recommend you to start small. Now after passing your first 5 or 10k account, you're going to use this to go big, which is the second step of building your capital. So let's say you want to buy a 100k account which costs you $500. You want to reinvest your profits from your small account. You don't want to go back into your pocket to look for money, so that your trading business can sustain itself. Now with a small account, assuming you average about 4% a month, it will take you 2 to 3 months for you to raise the $500 to buy your first 100k account, which is now the big account. And by the time you're buying your 100k account, you'll be way better in terms of managing your psychology because you've already done errors with the small accounts, you've done some payouts, your confidence level is very high. So even as you take the 100k, there's a very high chance that you'll make less errors, meaning you should be able to pass the account. Now here's another very important part. As you're taking all these prop firm challenges, the small accounts, I recommend you should have something like a job or a hustle or some outside income source. This is something that many traders neglect, but it affects their journey negatively. You see, being at a very bad financial position doesn't make it easier for you to grow your capital, for you to trade well in the markets. So as you're taking these 5k accounts, you don't want to be just sitting there and waiting for you to pass. Because if it takes you 2-3 months, you will feel as if it's a very long time, and this is how you find yourself trying to rush the process using bigger risk. So it's better for you to be having something on the side that brings income to you so that you can still focus and be patient to wait for your quality setups without feeling the pressure to make a lot of money tomorrow, next week, etc. Once you pass your first big account, let's say they are 100k, maximum within 3 months of consistency, if you average anything 3 to 4% a month, you will have achieved the $10,000 in accumulative payouts. And this is the same exact route that I used myself. You start small, then you reinvest in your prop firm capital, you go big, and it starts to become easier because with a bigger account, you just need to make tiny percentages, but the profit amount is still significantly large. Now you've talked about the systems you need and the journey path to building your capital. So the third and final thing you have to understand is you'll need laser focus during this process. Now when I talk of focus, there are a couple of things we need to break down. The first one is discipline, consistency, and lastly we have accuracy in your execution. A profitable strategy is useless if the person who's trading it can't execute accurately. And this is why you need a playbook. So after you develop your system, make sure you documented a playbook and a checklist somewhere. So before you enter the market, you want to make sure you are very accurate in the type of trades you are taking. Now, under the same accuracy as we've said, we have consistency and discipline. Consistency comes in where you have to take your setups repetitively. You don't want to be missing trades. If the backtest data shows you average 5 to 10 trades in a month, it assumes you are taking all the setup. So real time in the market, you don't want to be missing out on these trades. Otherwise, you won't be able to reflect the performance if you're not executing accurately. So you want to be showing up every day, taking the trades when they come, being consistent with your risk management. If you're risking, let's say 1%, stick to the same percentage, depending on what your data is showing you again. So you don't want to be risking 1% today, 4% the other day, then you come back to 0.2%. That inconsistency will make you to have a very poor profit and loss curve, which is something you definitely don't want. Now your focus is only to execute the system accurately. Don't try to predict the outcomes. Don't try to be in control. Don't try to fix targets on when you need to pass the challenge, when you need to get the payout. Now let's say for you to be profitable, sometimes you have to act like a blind person. You might not be seeing where you are going, but you're just executing based on your data. So because the data says this is a good setup, your work is just to take it. If it will lead stop loss, take profit, break even, that's none of your concern. You'll find out the result later. So you just keep moving, keep executing, keep taking the trades. Stop being so attached to them. Put your risk management in place. If it loses, well and good. If it goes to your profit, well and good. What matters is the system you're using as an edge, and of a sequence of trades, you'll come out positive. And part of being focused is you need to cut off distractions, which is the last thing I'll talk about. You won't achieve your first 10K in the market if you are joining 10 trading communities. You're trying to take signals from 5, 10 different groups every other time. You're confusing your analysis with what you see the public saying. If you have a nice trading community, well and good, but only stick to one community if you must, and one that has track record of performance, and make sure you are learning to build and develop yourself. One thing that affected my profitability in my early years was being in too many communities. So you do your analysis and let's say Euro USD is supposed to buy based on your price action knowledge. But then you open the internet and you find different traders with different opinions. Then you get scared, you don't take the trade, and eventually it plays out the way you expected. The next time you hear someone else saying take a buy or take a sell, you take it just because you heard someone saying on the internet, then it doesn't work out the way you thought. So you end up taking so many losses and being confused because of all this outside noise. So you need to cut all the outside noise and focus on your own journey as an individual trader. You can learn from people, you can study their analysis, but by all means, as long as you are respecting your playbook, as long as your playbook is backed by data, then follow it. Keep in mind you can have two traders taking different trades and all of them could be right. Because being right is subject to you respecting your playbook, not another person's opinion. So that brings me to the end of this video. Make sure you have all the three things in place, and it's inevitable that you are heading to your first $10,000 from the markets. Be sure to drop your thoughts as well in the comment section. Otherwise, I'll see you next time, guys. Peace out.